I'm Seb Frey with SantaCruzHomebroker.com.
And I'm John Brown with SantaCruzHomebroker.com.
And both of us are realtors working for Thunderbird Real Estate right here in Capitola. And today we wanted to take a few minutes to talk about this first-time homebuyer tax credit and its lesser well-known sibling, the move-up/repeat homebuyer tax credit. So John, what can you tell us about the first-time homebuyer tax credit?
Well, if you're looking to take advantage of this, just keep in mind that you will have to be in escrow by April 30th and you'll have to have closed escrow by June 30th. So time's a ticking.
Time is a ticking, that's right. There's not much time left. That only gives us really about a month and a half from today. Now one thing that's important to know is that a lot of people say it's an $8,000 tax credit. Well, that's not exactly true, is it, John?
It's not, no. Actually, the $8,000 tax credit, first off, is for first-time home buyers only, and you cannot have owned a house within this past 3 years from the time of taking advantage of this. The tax credit is equal to up to 10% of the home's purchase price and a maximum of $8,000. So
the maximum purchase price of the house you can buy is $800,000. The good news there is that a lot of houses in Santa Cruz now are priced a lot less than $800,000. Unfortunately, the best ones seem to be over $800,000, but that's another topic. Also, important thing to consider is the income limits, right, John?
That's right. It's $125,000 for single income, or for dual income, $225,000.
So that actually buys you a lot of house. Actually, you can maybe even afford an $800,000 house if you're making $225,000 a year. $225,000 a year, I should say.
Yeah, and a lot of people do fall into this category. So, I mean, this is a great opportunity for people if you do find the right home. Now, it doesn't necessarily mean you have to rush out there just to take advantage of this $8,000 tax credit because, quite frankly, there's just not a lot of inventory out there on the market. So it might be more beneficial to just take your time. Wait till that proper place comes along, the place that really does feel right. You don't or shouldn't feel rushed to get out there and just jump into this and jump into a home just to take advantage of this credit.
But that's actually a different segment. We're doing two segments. First, then we're going to talk about the move-up buyer tax credit, and then we're going to talk about why or why not you might want to take advantage of that. That's okay. That was a good thing. I think we can just edit that out. Oh, I didn't hit stop after all. Well, see, now this is the raw footage. Okay, so let's just take it up from there. So, John, there's also the first-time home buyer tax credit, and then there's the move-up or repeat buyer tax credit. What can you tell me about that?
Well, single taxpayers with incomes up to $125,000 and married couples with incomes up to $225,000 qualify for the full tax credit.
John, it sounds like you're reading off the teleprompter right there. Is that true?
Yes, indeed, I am. I have a teleprompter right in front of my face, and that's how I'm feeding information to you out there in the rest of the world.
John is professional, by the way. This is no accident. This is happening like this. All right, so now here's a little nitpicky detail with that first-time home buyer or repeat buyer credit is that you must have lived in the home for 5 of the last 8 years. So that's a little complicated to explain. I'm not going to explain it right now because I just can't wrap my head around it. But that's important to know. You can't have moved out of your house and try and sell that house unless you've lived there for at least 5 of the last 8 years. And there's another important thing to know about this is that there is a maximum tax credit you can receive. And what's that tax credit, John?
10% of the cost of the home. Up
to $6,500. So the purchase price cap is $800,000. You can't buy a home more expensive than $800,000, but you can only receive a tax credit up to $6,500. So one thing we really want to stress is that neither John nor I. Well, I'm not. John, are you an accountant or a tax professional?
No, I am not.
Right, neither am I. So one thing you really want to talk to your tax and accounting professional before you base any home purchase on any tax credit you may or may not receive. But my understanding is this is not a tax deduction. It's an actual tax credit. So if for some reason you made no money, the government would actually issue you a check for $6,500. At the end of the year as a refund to you. Is an actual tax credit, not a deduction. And one thing to note is that you cannot sell your home within 3 years of when you purchase it. So you must own a home for 3 years in order to keep that tax credit. And then if you don't, you'll have to repay some or all of that money back to our friends in the federal government. So I think that's a pretty good little discussion.
Certainly was, Seb.
Anything to add?
Keep your head up, homeowners and home buyers. There's a lot going on in the near future. You should be excited.
I know I am.
Yes, indeed.
All right, very good. Okay, thanks so much for listening. This is Seb Frey with SantaCruzHomebroker.com.
And I'm John Brown with SantaCruzHomebroker.com.
We'll catch you on the net. Ciao.